Maybe. In this episode of Market Mindset with Leslie Quander, we are going to talk about a type of fallacy, also a type of trap that can get us really kind of caught up as investors and have us sort of make decisions that are not really the best for us. We're going to talk about why this trap is problematic, kind of how it happens, and then how you can avoid it going forward to make better decisions for yourself and maybe even reframe your goals. So stay with me and let's get into it. Okay, so welcome to this episode of Market Mindset with Leslie Quander. I am your host, Leslie Quander, and I'm so excited to come to you and talk to you today. You know, this show is really interesting. We talk about the mindset of investing. Investing, as you know, can be very psychological. You, of course, need to have the skills, especially if you're a trader, to evaluate situations. And actually, as an investor, you need to have the skills to know that you're investing in something interesting or something that serves your goals. But there's also lots of psychology that goes into this, right? And if we don't have our mindsets right, we can sort of veer off or make bad decisions. So we are going to be talking today about a trap that can affect us not only in investing, but in life in general. And trap, no, really is the word. I know it sounds very, very concerning, and it can be. So we're going to talk about this trap and kind of the fallacy, and then we're going to talk about how this kind of can manifest and what we need to do to avoid it. So the trap that I'm referring to, and it might sound familiar to you, wait for it. Okay. It's called the sunk cost trap. The sunk cost trap, also sometimes called the sunk cost fallacy. And it refers to when we have something called sunk costs, right? We know that we've lost something. We know that we've sunk in this particular area, and yet we continue to pursue it. We continue to hang on. We maybe even continue to throw money after it, even though we know that it's already gone and already done. So these are costs that you've already lost, that it's looking like you probably can't recover. And yet, as humans, psychologically, we will pursue them anyway. Now, as I mentioned, this isn't just to do with investing, right? You've maybe experienced this in your own life. I know that I have, right? It's a very human thing to do. Let's say you've been waiting in line for 5 minutes, and then 5 minutes becomes 10 minutes, and then 10 minutes becomes 15 minutes, and you are over it. You're ready. You're done with this line. But because you've already been waiting in it for 10 minutes, 15 minutes, what do? You convince yourself, oh, I can hang on a little longer. You convince yourself, oh, okay, I can wait on the phone a little longer. Oh, even I can stay in this relationship a little longer, right? People have done that. You've been in a relationship and it's like, well, it's been 2 years, might as well stick with them. And so we can do this in all aspects of our life, even when it comes to like eating out, right? You can get somewhere, you can decide, oh, this restaurant is weird. I don't know how I feel about it. Okay. And then next thing you know, you've already, you said, I've shown up. This is what I'm doing. We're just going to stay and make the best of it. And it kind of comes down to that, right? Staying and making the best of it. But the problem when we do that is that we don't really understand, or we don't really process that you've already lost the time. We're not getting it back, right? You've already lost the funds. And for a long-term investor, these kind of things may not be so, top of mind, right? If you're in the market for the next 5, 10, 15 years, this maybe isn't something that you're worried about, that your investment has gone down. But if you have shorter term goals, let's say that you were, hoping to do something, this year, next year, and you are continuing to maybe throw money after a bad investment, well, maybe that is not the best thing for you and your goals. At minimum, maybe it's something that you really want to take time to think about and decide, is this really what I want to keep doing, right? Because it's one thing to hold, AKA hodling. Many of us have done it. It's one thing to hodl when you believe in what you've invested in, when you know that, or you don't really know because none of us know, but when you hope or you suspect that this will have a great use case in the future, this will serve us well in the future. It's one thing to hold with that in mind. But if you are at all, swayed in your conviction, if you think that you made a mistake, but you continue to hold on to something that is clearly, not doing well, or you think that you made a mistake, but you don't really want to commit it, and you continue to dollar cost average into it. And by that, I mean, you continue to buy it, you continue to, invest in it week after week, month after month, only because you've done it for so long, right? Not for any other reason. That's when you could be in a sunk cost trap. And these kind of traps can be very problematic. So I want to talk a little bit about why this can happen to us as humans. And I did a little bit of research on this, of course, before. This is something that I've always been really fascinated by, because like I said, it can pop up when we're going to the movies, in relationships, when we go shopping, when we're buying stocks and crypto, whatever it is, it can pop up with a lot of things. It can even pop up in a job situation, of course, right? Like you've worked this job and you've been there, I don't know, 2 years and you hate it. And yet you've been there 2 years and you're like, well, I'm just going to say this is what I'm used to. I've already given them 2 years of my life, right? It can happen with a lot of things. So there are some theories around why the sunk cost trap can kind of happen. And so I was reading about this in a journal, Memory and Cognition. There was a journal article that was published in 2021, and the authors of this paper outline a couple of theories around why sunk cost traps can happen. The first one that they mentioned is that people are motivated to be perceived as not wasteful. And this is called the waste avoidance theory. All right, this makes sense to you, right? Like you don't want people looking at you, probably if you're an average human in the world, like you wasted time, like you wasted money. You might not even want to appear to yourself like that you've made a mistake. So people don't want to look like they've wasted anything. And so they stay in these kind of situations because it's like, okay, well, as long as I'm in it, you think to yourself, well, as long as I'm in it, there's a chance it'll come back, right? Because if you walk away from it, it's gone, the time is done, the portfolio is down, right? If you walk away from it, but if you stay in it, there's a little bit of a chance. So sometimes you stay in it for that because you don't want to be perceived a certain way. A second theory that they talked about when it came to, this sunk cost trap that we can get into is self-justification theory. Okay. And this one is, and this may or may not feel familiar to you. I think sometimes if we're self-actualized, this does not actually apply so much, right? But it's the theory that people avoid admitting their previous decisions are flawed. Wait for it. Where have we seen this? Everywhere. This happens everywhere in the world, right? People don't want to admit when they're wrong. And yet we also know that research finds, and I've seen another study about this, that people can appreciate vulnerability, right? People appreciate when you're honest. People appreciate when you can just be direct and say, I messed up. I'm really sorry. And yet this theory exists that people don't like admitting that they're wrong, right? But like admitting that you're wrong, this is how you grow. This is how you learn. We all do not come into this investing game knowing everything. And yet we can get sunk into this sunk cost trap, literally, because we don't like admitting that we're wrong. There's a third one that I'll just gloss over really quick that they called prospect theory. Basically, they're saying that people evaluate outcomes based on gain and loss relative to a certain point rather than overall. So like, again, this kind of goes into if you were in something, let's say you put $10 in it and you're down $8 in your mind, you're thinking, okay, but maybe I can still come back this $8, as opposed to realizing that, no, you're down $8. And so, sometimes with this prospect theory, we can try one more time to invest because we think there's still a chance that we can make it back. My favorite of these three that I've outlined, though, are the first two, that basically there's this self-justification issue and that there's this waste avoidance issue. And really, a lot of this comes down to perception. And again, now we're back to psychology. I think that if we could just, and this goes for life in general, but certainly for investing, I think that if we could just make more decisions based, again, on our goals, on what we want, on what we're willing to do, and if we understand that sometimes we're going to be wrong, this investing life would be so much easier, right? Because you would be able to see, okay, I made a mistake here, I'm going to cut that out, I'm going to switch this, and be able to move on. And so we've talked in previous episodes about herd mentality. Definitely, if you haven't seen that episode, please check it out because it talks talks about another phenomenon where we tend to follow the herd. And we've talked about being overly emotional in investing. That also is relevant to this, right? Because if you're in this sunk cost trap and you see things kind of going down, you see the ship going down, but you're emotional about it, you might not be able to make the decisions that you would make if you could just look at things logically. So I thought this was very interesting. I think it's fascinating that researchers are doing experiments on this, looking into this. One other thing about this experiment that I did see, and this again was in the Memory and Cognition article, is that the researchers found that people were less likely to sort of succumb to this sunk cost trap if it hurt somebody else. So let's say, for example, in the research, I want to say they were going to a movie and, they had already invested in this movie. And so when they found out that somebody was actually potentially going to be bothered by seeing this movie, maybe it was a child who didn't want to see it, they were more willing to back out of it, right? Versus if not. So I want to kind of pivot and talk about this as it relates to investments, because yes, we are individuals, we are adults, right, in the world, but we have families, we have responsibilities. And so I think when it comes to this sunk cost trap, and I'm starting to get into the portion of the video where we talk about how to avoid it, right, and how to kind of look at things. If you find yourself in a situation where it's difficult for you to admit that you were wrong, you're in a situation where it's like, wait, did I make a mistake here? Do I need to get out of here? Do I need to reevaluate what I'm doing here? Kind of think about, will this hurt anyone else? I think the moral question there sometimes can help us better understand this might be something that I need to stop doing. And I say this also because I've been seeing on Twitter these little, confessions that people are making about Twitter, and some of them are about their investments, and some of them are very interesting. Like people are confessing to using money in ways that people didn't know about, right? You always see the little jokes too that people make about, oh, she doesn't know that I spent our money, and that is problematic. Okay, we'll save that for a separate issue. Hopefully you're not spending money without your spouse's consent or knowledge, you know what I mean? Because that's not really a great thing to do to a person. So maybe we'll do that in another issue. But if you look at your decisions and you realize, wow, if I continue to throw money after this investment that isn't doing well, could it be hurting my family? Could it be hurting, my future family, right? Maybe you don't have anyone yet to take care of, but if you continue to dollar cost average into a token that seems dead, maybe you are not only affecting your future, but someone else's future. Maybe it's your fiance, maybe it's your parents, maybe it's your children, maybe it's your siblings. So really, when you're trying to evaluate this, try to push through the fact that we as humans, sometimes don't like to admit that we're wrong. Try to push past the fact that, people might look at you some kind of way and just think, okay, but is this hurting someone? And if you see that it is hurting someone, if you see that this is potentially problematic, if you see that this does have consequences that go beyond you, maybe it's affecting your house payment or your rent payment, really get serious with yourself and really quiet and think about, is this really worth digging in your heels on this thing over, or should you possibly maybe change a strategy, or at least, like I said, give it some thought. So I think right now, as the economy continues to be uncertain, as we continue to see inflation sky high, I talked about this in the last episode, we've got inflation sky high. We really need to preserve the capital that we do have, right? We're in a situation where we don't know what's going to happen in the world. We don't know. We don't know what's going on with how things are going to react as the Fed makes the changes that it's making, as interest rates are going up. We don't necessarily know what our purchasing power is going to be. So if you're in a situation where you are in a sunk cost trap, I think this is a perfect time, and this is not financial advice. It never is. You always should make your own decisions and talk with a financial planner, especially ideally someone certified, about what you're doing. But I think this is a really great time to evaluate our portfolios and to evaluate what we're doing and decide, is this where we want to be for this amount of time, right? And again, if you're a long-term investor, you might look at everything. I'm an investor. You might look at everything and say, yeah, I'm comfortable with this. But if you have some shorter term goals, I think this is really an opportunity for you to ask yourself, am I in a sunk cost trap? Is this something maybe that I need to avoid? So I also want to say too, there's some information. Sometimes we'll base these decisions in this trap on past behaviors, right? Because we don't want to lose the time or the money that we've already lost. But look, in this investing game, and I'm saying game, it's not a game, it's very serious. In this investing life and in life in general, sometimes we lose. That's just a fact. Sometimes we lose. And so, part of these, as we walk this walk, as we, work to build wealth, sometimes we're going to lose along the way. And sometimes we're going to have to pivot. And I just want to encourage you and say that if that is what you decide to do, that is okay. We don't need to beat ourselves out about it, right? A lot of people, portfolios are down, and always, as always, you don't lose the money until you actually cash out in a portfolio, right? Officially. But if you decide, I want to reallocate things, or if you decide, I want to maybe DCA into something else, or if you decide, actually, wait, I don't want to take any more action, because that's an option too, right? Sometimes when things are uncertain, we don't need to do anything. And I think maybe we can talk about that a little bit more in a future episode. But so here's what I would encourage you to do if you find yourself potentially in one of these traps. I would say really take some time and get quiet about your portfolio. Look at it. Is this a portfolio that you're really happy with? Is this a portfolio that you are comfortable with for the coming months, for the coming, year, for the coming 2 years, 3 years? If it's not, if maybe you would invest differently, then maybe think about what you might want to do differently going forward. Again, maybe that is, preserving as much capital as you can from your day job, and kind of, I don't know. I mean, whatever your situation is, maybe it's holding on to as much capital as you can right now. Maybe you don't want to be dollar cost averaging into the same things that you were before. Maybe you just want to wait quietly. Maybe you want to use this time to do more research, right? Maybe you want to use this time to think about who should be on your team. That's another episode we did, right? So instead of actively participating in the market, maybe you want to use this time to network, to read, to grow, right? And maybe it's okay that you are going to accept that on this particular decision, on this particular investment, on this particular token, it's okay if you decide it's not something that you want to invest in again. And hey, look, if you're willing to wait, because I know I personally believe in this space, I think cryptocurrency is wonderful, but we all know there are a lot of questions happening with how regulations are going to go. Like I said, I believe in the space. But if you, long term, if you're like, I'm good, I'm fine, that's wonderful. But at least you are not in a trap, right? At least you are actively making a decision about what you want to do. At least you're not just staying in a situation because you're hoping maybe something will change. You have no idea really, or you're not staying in a situation hoping that you can throw money, good money after bad, and hope that fix it. You're staying in a situation because you have conviction. And if you are, I encourage you to do that. I am super happy for you if that's where you are. But I think as we start to wrap this up, I think just really being aware of the psychological traps that we can do and become part of. And I think just being aware of how we can be affected by time that we've already spent, money that we've already spent, moves that we've already made, how we can be affected by that, I think is really important. Because look, and traders will tell you, right? And so if anyone's a trader, definitely feel free to comment on this video, share your thoughts with me. I'm at Leslie Quander everywhere. But a lot of traders will tell you, like, look, we're setting stop losses. Like once we see things drop, a certain amount, like we're out of there, right? And so this is how they're operating. And that is for a reason, right? Because they're protecting, capital. They're protecting themselves so that they can make another move again. So the thing with sunk costs, I think that can be problematic. And this is with, again, jobs, life, investing, everything. If you continue to stay in a place that's not working, that can be very problematic for you. And that can actually hold you back from things that would be better for you, right? That can actually hold you back from being able to pivot in a way that might work better for you. So I just want to encourage you. It's okay, right? We make mistakes. These things happen. Definitely take some time. I would offer to think about your current allocations, to think about your plans going forward, to think about if this is a time for you where you just kind of want to wait and watch. That is fine. I really thank you for being here with me. And I would love to know kind of how you feel about this. I would love to know, has this ever happened to you? Have you ever done this? I will be very transparent. Of course, I'm human, right? I've of course fallen into this trap, but I think the more aware that I become and the more that I learn about, even things that I'm invested in, but the more just I learn about life, I think it's okay to sort of see, okay, wait, this isn't going right. And I think it's okay to pivot. And I think it's okay to change your mind when it's based on logic and not emotion, because what do we always say? Emotions have no place in the market when we're making investing decisions. So thank you so much for tuning into this episode of Market Mindset with Leslie Quander. I really value each and every one of you who watch. I really value the really kind comments that I've received. If there's anything on your mind that you think we should be discussing, definitely feel free to drop me a line. You can find me all social media at Leslie Quander, Twitter, Instagram, TikTok, LinkedIn, all of it. And you can always reach out to me directly at lesliequander.com as well. Love doing this podcast. Love, that we're having this dialogue. Thank you so much for tuning in. In closing, beware of the sunk cost trap. Beware of this fallacy. Just because we're down in time or money or whatever it is, doesn't necessarily mean that we have to stay there, right? Doesn't necessarily mean that we have to continue to throw resources after something. It is okay to pivot. It is okay to change your mind, okay? Based on logic. So thank you so much for being with me. Hope to see you around and hope to see you soon. Okay, thanks and bye.